Alright guys, welcome back. Let's get into our top 2 trades to begin the week, starting with 3M and Tesla. Tuesday morning, I have given everyone a warning. I believe Sunday, I sent out a text saying, look, this is our schedule. This is how we're going to do it. So I hope you're all ready. Hope you have your day trades free. I hope you're not having to work on any of these days because it's going to be a very good week. I hope you're excited, but not too excited because we got to contain our emotions. Profit goal for the week. Almost every single person in the group should make at least $25,000 this week, unless you're like a very small account or something, okay? I mean, trust me, this is a good week, okay? And we're starting off with heat, okay? We're packing heat in these first 2 trades, so let's go ahead and get into it. Here's 3M, and then we're going to get into the Tesla earnings, okay? So starting with 3M, you can see we have a divergence already. They've got shitty earnings growth. As a matter of fact, they have deceleration, yet the stock price continues to climb higher. That's a divergence, right? So we don't always see that, but when we do, it's not a good sign, okay? Here's the earnings we're going to be looking at, and I think there's kids in our street screaming, so if you hear kids on the street screaming, can't do anything about that. But earnings divergence, here's the earnings we're going to look at. Let's get into it. All right, so this was the last earnings, and I was looking forward to trading it, but it just didn't line up. Okay, you're going to see we had a MACD cross coming to the upside with the basing period right here, and that was a highly bullish sign, so I stayed away from it last quarter. Okay, so if you've been in the club since last quarter, you probably remember me possibly talking about, hey guys, I love 3M, but we got to stay away from it. Well, it's time to get back into 3M this quarter. I think it's perfect. Okay, so this was actually your only bullish scenario you're ever going to see in 3M here, from which I'm going to show you. So look at this. This was last quarter. Buy calls at the dip, and the thing just skyrockets the next day. That was your first reaction for 3M. But once again, that's the only bullish reaction you've ever seen here. Let's get into the next example. Look at this. Gap down, short the open and the bounce, drop. Gap down, short the open, short the bounce, drop. Gap up, short the bounce, drop. Gap down, short the open, drop. Gap down, short the open, drop. Gap up, short the open and the bounce, drop. And gap down, short the open and the bounce, drop. So look at that, right? This is one bearish case, 2 bearish case, 3 bearish case, 4 bearish case, 5 bearish case, 6 bearish case, 7 bearish case, and 1 bullish case. So 7 out of 8 times, what you want to do? You wanted to short it. Now, some similar characteristics to point out here. You've got a MACD converging to the downside here. Well, what do we have right now? We also have a MACD that's going to the downside. It's a really weak MACD, right? So the thing continues to climb higher, but the MACD is doing nothing almost. Okay, so this is definitely not a bullish sign, that's for sure. So you've got a weak MACD, which is highly similar to this MACD right here converging to the downside. You've got a MACD converge to the downside here. You've got a MACD converge in the making after the earnings, right? But basically, you can see they all always have weak MACDs, right? Whereas this case, which was bullish, you had a bullish MACD cross, right? Going into the earnings, and this is why we stayed away from it, right? This just looked way too bullish to be trading to the put side, even though 7 of the last 7 earnings here were highly bearish, right? So keep that in mind, right? This is why we didn't short 3M last time, right? Because that MACD cross, right? Understanding how to read those charts, right? Increasing buy volume, right? That's why we stayed away from it. And, of course, could we have went long? Yeah, but why would I go long on a stock that's dropped 7 of the last 7 times previous to this, right? So I'm just going to stay away from it if things aren't lining up, right? But today they're lining up perfectly. So once again, weak MACD to a cross, weak MACD to a cross, weak MACD to a cross, already crossed, okay, well in advance, which this is also similar to what we have, right? Because the cross has already occurred. It's failed to converge back to the upside, and it's already down, right? So it's another similar case. Here, you've got a solid MACD, not a bad MACD whatsoever, actually, okay? And so this is somewhat of a bullish case, right? Because it drops, but recovers, right? So still, this is not that similar to what we have today, but still drops, right? Here, you have a weak MACD into a cross. So here, weak MACD into a cross, right? So the charts are identical pretty much to all these amazing scenarios we've gotten before, and you just can't not like this chart. You've got a black candle, which are often foreshadowing a drop before it happens, right, guys? For example, the black candle doesn't always mean it's going to drop the next day. A lot of times you'll see a black candle, and it'll foreshadow that drop, right? And so you've got that there. You had an acceleration in sell volume going into the earnings today here. You had the RSI peak at this 72-ish level, which is exactly where we peaked last time after this amazing bullish run-up in the earnings, right? So this is kind of cool, right? Because we've seen the RSI peak here twice, right? And so this was the peak after it went bullish, and this is now going to be the peak when it's about to flip bearish. All right, so this shit's about to drop here. And then, let's see. What was I going to say next is our calculations, okay? So you can already see, I mean, everything is lining up perfectly. And on top of that, we've got a bearish setup in the market. Now, my signal is also telling me we're getting a bearish signal most likely tomorrow, but it is possible the bearish signal could drag out into the next day. But guys, actually, I'll probably be posting this on the YouTube channel. So you guys, if you're in the Crash Trade Club, you know exactly what the fuck you're seeing here. Here, I just said here twice, okay? So I don't even need to explain what's going on there, do I? Okay, and so you see that chart. There's nothing else to say here, okay? I'm going to keep quiet. If you haven't taken the charts course, you need to do that, okay? You're missing out big time. But anyways, we've got an 87.5% put bias, average DTR 5.8, absolute value 3.9%, 75% probability for a continuation. So this means if we're going to drop tomorrow, which I can almost guarantee it, right? Just based on our evidence and based on what we went over here. Okay, we're going to drop, and we're also going to drop the following day, right? Because we have a 75% probability of that happening, right? So you should be looking to hold at least half of your puts into the next day, assuming all things go according to plan. The predicted DTR for this quarter is 7 points, meaning from the close of the previous day. So we are calculating a drop down to 192.5 tomorrow. Okay, and I know it seems a little out there, but not necessarily when you consider the fact that this is earnings and not just your typical day, right? So this is solid calculation. Once again, our average DTR is 5.8, so we could bounce and maybe only finish at like 195, 194. But if we take a look at the option chain here, right, and we're looking at the 192.5 strikes, right, they're going for 70 cents. And if we dropped all the way down to 192.5, right, we would be at the money. Now, what's at the money currently is the 200 strike puts, literally 40 cents in the money, right? So these are going for about $3, right? So if we get down to 192.5, we should expect them to be close to the value of these at the monies, right? Now, granted, you're going to have theta battling you there, so obviously you're not going to be exactly as much tomorrow as you are today if you're following what I'm saying. If not, another reason for you to take the crash trading charts course. Okay, but you can see we're predicting basically if we drop down to 192.5, you should expect these 192.5s to be about 4x, 400% return if we reach that magnitude and if we reach this calculation of a 7 DTR. Okay, so basically our expected finish, we're expecting to finish at 206 if it was a bullish reaction. Okay, obviously we're not expecting a bullish reaction, so we are obviously have a put bias, right? So with the put bias, we do expect to drop down to 192, and I think by the next day, right, by Wednesday, it's pretty much inevitable if we get that bearish continuation, which we have a 75% probability of that happening. Okay, so this is our trade for tomorrow on 3M. I'm going to go ahead and cut this clip right now. And then for Crash Trading Club members, we're going to get into how to trade Tesla earnings here. So guys, if you're watching this on the YouTube channel, I just want to say, please take advantage of this trade, you know, and that being said, nothing is guaranteed in the market. All you can do is speculate and try to boost your probabilities and get an edge. And that's exactly what we've done here. We've predicted an edge based on the historical reactions and based on our calculations. Okay, so take advantage of this trade. We're looking to short 3M at the open and the bounce tomorrow if it bounces. Okay, and we have a 75% chance to continue lower into the next day. So this is our calculation, 192.5. If you see 3M hit 192.5, you know who's the best trader in the world. All right, so thank you guys so much for watching. Make sure you drop a like on this video. And hey, if this video gets 50 likes, I will actually post the second clip that I'll be posting for our members in the Crash Trading Club. I'll show you exactly how to trade Tesla earnings, okay? But that's only if this video gets 50 likes, and the chances of that happening are low because this is a video about 3M, which is not a popular stock. But if you share the shit out of this video on Reddit, on Facebook, tell your friends to like it, tell your friends to comment. You comment, okay, then there's a chance this video will get 50 likes. And then there's a chance I'll actually post these Tesla earnings play for you as well. Okay, so huge day, huge week ahead of us. I hope you enjoyed this free Crash Trading Club video. This is what we do for our members every single week, and this is how we get our results. This is how you see our students make 10,000, 20,000, 50,000, 100,000, and so forth. So guys, if you make some good money on this trade, which you probably will, okay, I'd be smart and I'd use that, the profits, and I would join our club so you can be like our members here making 12,000, 9,000, 5,000, 50,000, 13,000. Guys, you've been following the channel. You know what we do, and you know we're the best in the world. All right, 81,000, 21,000. All right, so use your profits, be smart, and come join us after we nail this trade, guys. Wishing everyone the best of luck. I hope you guys have a great day trading this. Make sure you drop a thumbs up. Make sure you subscribe. Let me know if you have any questions, okay, and I will see you on the next video.